Picture this. You're sitting at your computer, staring at two different trading options on Olymp Trade. One promises up to 93% returns in just minutes. That's fixed time trading. The other offers unlimited profit potential, but requires way more skill. That's Forex. Which one's actually right for you? Here's the thing. Most people jump into trading without understanding these fundamental differences, and honestly, that's like driving blindfolded. But you're here, which means you're already ahead of 90% of traders out there. I'm going to break down everything you need to know about fixed time trading versus Forex on Olymp Trade so you can make the smartest choice for your situation. And hey, I've been exactly where you are right now, confused, overwhelmed, but ready to learn. By the end of this video, you'll know exactly which trading style matches your goals, risk tolerance, and experience level. No fluff, no BS. Just real insights that'll save you from costly mistakes. So, you're about to discover the one key difference between these trading styles that determines whether you'll love trading or hate it, and it's probably not what you think. Let's start with fixed time trading, because it's honestly the simpler of the two. Think of it like this. You're basically making a prediction. Will this currency pair go up or down in the next 5 minutes? That's it. Here's how it works on Olymp Trade. You pick your asset. Let's say Euro USD. Choose your time frame from 5 seconds to 1 month. Decide if the price will go higher or lower and place your trade. The platform shows you exactly what you'll earn if you're right, up to 93% return on your investment. Let me walk you through a beginner-friendly example. Say you deposit the minimum $10 into your Olymp Trade account. Following their recommendation of risking only 1 to 2% per trade, you could place a $1 trade on Euro USD, predicting it'll go up in 15 minutes. If you're correct and the payout is 82%, you'd earn 0.82 profit. Simple math, fixed outcome. The beauty? You know your maximum loss upfront. It's just your trade amount. But here's the catch. Research shows you need to win about 70% of your trades to be profitable long-term because you're not getting 1.1 payouts. Now, traditional Forex is a completely different beast. Instead of predicting direction for a fixed time, you're actually buying and selling currencies in the real market. When you buy Euro USD, you literally own that position until you decide to sell it. The profit potential, unlimited. If Euro USD moves a 100 pips in your favor, you could make way more than any fixed percentage. But here's the flip side. Your losses aren't capped either. Let's look at an example. Using the same $10 deposit, let's say you trade with 100 leverage, common on Olymp Trade. You could control a $1,000 position with just $10. If Ethereum here moves 50 pips in your favor, that's roughly $5 profit, a 50% gain on your account. But if it moves 50 pips against you, you could lose your entire $10, the key difference. In Forex, you decide when to take profits or cut losses. There's no expiry time, you're in control. That said, here's what nobody talks about. These aren't just different products, they're different philosophies. Fixed time trading is like gambling with better odds. You're predicting outcomes, not really analyzing market fundamentals. The research I found shows many experts consider it high risk, because it requires you to be right more often than wrong just to break even. Forex trading is actual investing. You're participating in the world's largest financial market, where $6+ trillion trades daily. Your success depends on market analysis, economic understanding, and risk management skills. Time commitment. Fixed time. Minutes to hours per trade. Forex can be minutes or months. You choose skill requirements. Fixed time. Basic chart reading, timing. Forex, market analysis, economic fundamentals, advanced risk management, profit potential, fixed time, capped at roughly 93% max. Forex, unlimited upside and downside. Which one's right for you? Look, I can't make this decision for you, but I can give you the framework. Choose fixed time trading if you want simple, quick decisions. You prefer knowing your exact risk up front. You're okay with needing high win rates to profit. You have limited time for market analysis. Choose Forex if you want unlimited profit potential. You're willing to learn market analysis. You can handle variable risk and losses. You want to build real trading skills. Here's my honest take. Start with the Olymp Trade demo account. It comes loaded with $10,000 virtual money. Try both styles. See which one clicks with your personality and goals. Bottom line, fixed time trading gives you simplicity and capped risk, while Forex gives you unlimited potential and real market exposure. Neither is better. They serve different purposes for different traders. The smartest move? Don't jump in blindly. Use that demo account, test both approaches, and choose based on your comfort level and goals, not some guru's promises. If this helped clarify things for you, smash that like button and subscribe for more honest trading content. Drop a comment below. Are you Team Fixed Time or Team Forex? I read every single one. And hey, if you decide to try Olymp Trade, I've got a link in the description. Full disclosure, I might earn a small commission if you use it, but it doesn't cost you anything extra, and it helps me keep making these videos. Your choice entirely.